Good morning, Colorado. Today is Wednesday, the 10th of August, and I am Randy Flood, the only certified mortgage coach in the state of Colorado. In the categories of rate go up, the only thing we have is wholesale inventories. Not really concerned about that because all the action is on the rates go down. Yesterday's three-year auction went extremely well. Also, if you're following the news, you know that the Fed, first time ever, gave a time frame as far as what they're going to do. Bernanke said that they're going to keep the rates down to near zero till the mid of 2013. This is fantastic news. And of course, yesterday the Dow Jones bounced up over 600 points. It is already down over 300 points, and I expect the Dow to continue to fall. Now, VIX, the VIX, this is an index, and it's really the fear index of what's actually happening. And the reason we're having such great rates is because of the fear. Here's the VIX index. I just want to point out a couple of things. We've been going, I don't know if you can see it, but right along here is, 15. And that's where we've been, May, June, July. We shot up to almost 50. The only other time that it has gotten this high was back in the financial crisis of 2008, and it got up to almost 80. So once again, there's a lot of fear in the market, which is great for mortgage-backed securities and keeping interest rates low. Here's what the market is currently doing right now. It's up 21 basis points, and actually, well, it just went down to 6. What I was going to say, and this is real time, what I was going to say is yesterday or today was the bond rollover, so it's actually up higher by another 45 basis points. But I just wanted to show you that, it is up, and when you take a look at it, you can see how much we jumped up. Earlier this morning, it was all the way up here, which is great. I want to show you also in perspective. Once again, look how we have jumped since the 26th or 27th of July. That's fantastic. Additionally, if you take a look at the long term, back last fall, we had the lowest interest rates ever, and I'm almost 60 years old. And look what's happening. We're going into territory that we've never been in, and that is great for the consumers as far as wanting to buy homes or being able to refinance. I want to show you exactly what the lenders are doing. Today there's actually 73 that have significantly improved their pricing, and overall that's a change of 0.767. And you're saying, what's the significance of that? Well, on a $250,000 home or loan, and with this percent of change, that is the same thing as the borrower or the home buyer getting an extra $1,917 that they can use for closing costs, and that is significant. And once again, you can see that there's a few out here that have actually decreased their pricing, and a lot of that is because they're backlogged and they don't want to reduce the pricing to where it should be because they can't handle the volume. And that's another thing we're going to have to worry about, is all the volume, because things are going to take longer in order to get closed. This is what the other services are recommending right now. Rate Alert is saying if you're closing within 7 days, go on and lock. That's great advice. And then anything past 7 days, you should be floating. But once again, they realize that there's going to be a lot of volatility in the next couple of weeks. Now, the rate lock advisory, if you recall from yesterday, it was completely red, saying, hey, if you're going to have a closing, lock it within the next 60 days. And as you can tell that they've actually finally changed. I think they're very conservative in their lock advisory. So in summary, Fed vows to keep rates low for another 24 months. That is super. The 3-year auction yesterday was fantastic. The VIX or the VIX index, the fear, hit an all-time or a 2-year high. The Dow is nowhere near done with the sell-off. It's going to keep on going down. Uh, I know that's going to have a negative effect on a lot of people with their 401ks, IRAs, and I'll discuss all this later in another video. And there is a lot of emotion in the market, so there is going to be a lot of volatility keep on going. The 10-year bond is at all-time lows, and as I mentioned, I'm almost 60 years old and I've never seen rates this low. Now, I'm going to stick my neck out. I believe that the government will come out with some type of housing package, some type of stimulus, because they want to take advantage of these historic lows. Maybe it's going to be another tax credit. What would make a lot of sense if they actually had a conventional streamlined refinance without appraisal, very similar to what you can do with FHA or VA loans. That would significantly help the economy. And bottom line is we're going to have a correction sooner or later. We can't keep on going straight up without having come back down. But that is also healthy. Now, the thought of the day: don't let yesterday use up too much of today. And that's by Will Rogers. I grew up in Oklahoma, and Will Rogers is a great person. And, I love his humor. And this really applies because whether you have your money in the stock market or in bonds, things are going up and down, and you can't really worry about it. So just focus on what you can really do or control, because you definitely can't control the markets. In closing, if you're a home buyer, now's the time to actually buy. If you are a homeowner and your interest rate is over 5%, you should definitely be looking at refinancing. And as far as real estate agents or financial planners, hey, have your people call me. I'll give them great advice. And once again, I'm Colorado's only certified mortgage coach, and I'm here to help you. And as always, wanting only the best for you.